So yeah, we'll just pull out to the macro chart on Bitcoin real quick and pull all the drawings off. So currently, I'm still in this position from roughly 42,000 now. The entry actually initially when I first entered the position was 38888. So you can see how like as I actively manage the position, as you pull in like, take profits, you end up kind of drifting that initial entry up a little bit, um, which is kind of an entire different discussion in itself. If you were to hedge your position, you wouldn't see that happening. But yeah, I don't really have that option on the paper trading account, so it's kind of you see this initial entry point drift up, but yeah, it's kind of framed on this idea on the macro coming down here, hitting this level here, and then you see your reaction off that level, and then so it hits this level here, and then you get a what would be a break of structure on the daily, and then it ever since it taps this level, which is your Wyckoff spring from the spring 2021, or excuse me, summer 2021. Ever since it hits that level, then it starts defending the lows, right? So you see a series of higher lows, and now a series of higher highs as well. So if we go down to the daily, you kind of see that same signature playing out. So again, that level we were talking about hits that macro level from summer 2021, and then you see the highs defended. If you were to draw like a trend line like this, again, it's not a magical line. It's just there to illustrate, uh, that phenomena of higher lows. And you could also do the same thing with the lower highs, although it's not as dramatic. But this is not as good. But essentially, get the idea that price starts setting higher highs, starts breaking this formation, and then you get a little bit of a breakout. And you know, so seeing that breakout, I didn't necessarily take the entry on this position up here. It sort of worked its way up there. I was more down here when things started to change around on the lower time frames. And then I capped about 50 risk at this level and left 50 on. So, roughly the idea being that I didn't necessarily know it was going to break out here. But I had a reasonable expectation, but I didn't know for sure. So I had to cap a significant portion of risk at the range highs here. And, then ultimately, we did see that break. And then that kind of is the signal for me that the remaining risk I have on this position is probably going to be a little bit more of a long-term position, just based on where you see the price unfurling on the way it's playing out. Assuming we don't see a swing high failure pattern here, which we could see, but just assuming that this is like the start of a trend of volatility expansion, then this position could potentially be a little bit longer term position, looking for those higher numbers, up to 56K initially, and then potentially even higher than that.
Can I make a question?
Yeah, go ahead.
Okay, I understood the general premise, and how you identify the order flow and why you decided to get long. My question would be, given the entry, where was the initial start on the trade you just took?
Yeah, so I need to go down to the hourly.
Oh, okay.
So initially, the so the entry was based on this idea here. So we kind of see this like coiling range here. Volatility was low, and I I actually took a long position. I was in a long position during this period here, and I had a stop below this level. So I had a stop below this level here. I think this low right here. So an entry framed around this high right here. What is it? 39,444 roughly, this area. And I ultimately got stopped out on this trade. But this is a good example of an area that gave me an opportunity to get back in a trade. So I saw, I got stopped out on this move, I believe. I think my stop was actually at this low here. So I got stopped out. But then I see price run back up above these highs right here. And you kind of get that whipsaw behavior. And so then I was looking for a retracement. Uh, and I played a retracement down to a 618. And ended up sort of re-entering kind of near the area where I got stopped out. Not exactly, but sort of around the same area. That's actually where my initial position was. Actually, it was this area down here. Um, but yeah, so
Yeah,
my initial stop on the position was here, tied to this low here.
yeah, it makes sense at that point. Yeah,
Yeah,
it's
37.555.
it's pretty reoccurring behavior, and I do like that a lot.
Yeah,
When you have a trading range like that, which is pretty definable. I mean, if you look at the left hand side, you can clearly see price is ranging. I do like those moments where price deeply, immediately and aggressively dips down below range low, and then it quickly gets back in. Usually, it's a good telltale sign that it found liquidity. And that liquidity is sustained price, so it would make sense for me to try to get in long.
yeah, yeah. Generally, yeah, because you see the range lows taken out, and then it runs aggressively for the highs. Yeah, that's
You could, depending on what kind of a school of thought you are following or embracing, you could see that deep dive as a deviation, right?
yeah, yeah, definitely. Um, and this, and then of course after that, this was kind of around the FOMC meeting. So I actually entered before the FOMC meeting, which is a little bit risky, but the FOMC meeting actually came in. I believe it was this. This is leading up to it, and then you have the actual data release somewhere. I think right here. Yeah, March 16th, roughly 2:30, 1400 hours. So you can see that like FOMC volatility come in, but it sort of came in my favor and never stopped me out of my trade. So it was a little bit of a cavalier trade to enter before FOMC, a little aggressive, but I was pretty confident in my belief that we're at a macro level that I felt like I had to take the trade. It's one of those where it's like it's a little bit it's the most responsible thing you could do is take the trade, or put it another way, like it's irresponsible not to. The opportunity is so great, but
Yeah,
yeah, and then I generally I wrote it up a little bit higher, taking profits along the way. I mean, you can kind of see my paper trading account. Um, so this is kind of I mentioned that I got stopped out initially on the trade. I got stopped out here, but then these are the take profits that I've taken as price moves in my favor. Um, yeah, and then of course this move happened here, and basically secured, I would say, roughly 50% risk on the position here. So every time price ran above the high, I was taking a little bit of profit, and then on retracements adding a little bit of risk, but always less than the amount of profit I took. So I would take the initial position size was 100 lots. So maybe if I took 10 off up here, then on the retracement I would add five, because the idea is that I want to be securing equity in overall, and as price moves up, lowering risk. So maybe take profit order size might have been 10, and add five, take off 10, add five, take off 10, and then here it starts to really run away. And by this point, I had 50% profit booked. Um, I don't really have a stop in the market right now, just because price, is kind of a little bit further away from my invalidation. But my position has moved up to a large extent, enough so that I probably need to start getting a little more active and dynamic in managing that risk if we are seeing a turnaround. And I think this would actually be a good level to do that. So we have this 44290 level on Coinbase, and so again, I'm not picking an area in the market where um, I'm expecting uh, taking all of the risk off, but the idea is that I'm just managing a portion of risk so that if there is a stop run there, that it does I still have a position on the table, and maybe I do want to have another safety stop put in place, and I'll probably after we get off the call set in that. But the idea being that you want to have a certain amount of risk managed on your position as in the form of a static stop, right? And
Yeah.
so we got 15 there, and probably add 10 or so, maybe to probably to break even actually, you know, somewhere around there. But if you were seeing if you were looking at this as a breakdown scenario, then this actually would be a good place to hedge some of that profit up here. Um, I'm actually kind of looking at it more from the daily perspective. So I'm, you know, from a daily perspective, it's not a great level to take profit actually, just because you know it's in my opinion it's either going to create a swing failure and that type of scenario, or it's going to expand much higher. So this is a scenario where I'm not really actively trying to play the low time frames. I'm kind of giving it a little room to breathe. But you could get a little dynamic, right? You could get in there and trade these swings, because if you went down to a 15-minute chart, right, this what we're talking about there is not being significant, is an entire dynamic swing, right, up to this point of release. So it's not that this is very tradable price action, right? I mean, you could you know play this a number of ways, but essentially, yeah, I'm more focused on these lows being defended right here. But you could create a scenario where maybe you want to play this as well. Maybe you put a stop here and add a little bit risk lower. Say manage some of your risk up here and look to add more down. Near this, like particularly just looking at this level, this looks like a good
Yeah.
level right
I
there.
I knew you would have gone with that.
Yeah. So I think actually I'm gonna go right there, and it doesn't. I don't demand perfection on the level entry, so just 44888. Maybe add, add 10 lots right there. Let's see. So buy 44888, and then we can manage. Let's see, 46095, 46095, and roughly 4555. Roughly, what I'm just doing is I'm just managing risk and profit here. I know that this is like not really on an hourly chart. It's not really the type of this is a point of release. But look, I mean, we already saw a reaction from there, right? I mean, we are. This was I missed it essentially, right? Um, the time to trade it was right here, and you got
Yeah.
a trade from 4,700 to 45,555. So in my mind, that trade is no longer operable, right? I don't think it's going to trade up there and sell off again.
Yeah, it's been, liquidity at that level has been that tough already. So, the odds of another positive reaction if you go short, it would be, for me, very diminished.
Yeah, yeah, exactly. So that, yeah, it's kind of just my frame. I mean, I'm just kind of trying to establish that little bit of a longer term position. Again, it makes a lot more sense if you go out to what I'm doing. If you go to a monthly chart and look at the monthly chart, right? You just last month we set in the confirmed higher low, right? So
Yep.
despite all the craziness that's happened in the last year and a half or so, monthly just is just an uptrend. That's all it is, and we just set in a higher low. So I'm kind of trying to establish a position in line with what I see happening on the higher time frames in my macro opinion, and because I do think that this is a unique area in the market, unique opportunity to get long, um, just based on the high time frames. And if you put if you think about there's every there's different times in the market where you get unique opportunities, and your work is is more valuable when you're building a position in those. So if you think about what times you would want to interact with the market, this would be the ideal time, right, to build that position. Because if the market starts running and starts breaking out and getting volatile, then it's kind of hard to build a position after that point. It's once the volatility picks up like that, the ideal scenario is already having that position established, prior to that breakout. But of
Do you?
course, sorry,
Ah,
go
yeah, yeah.
go ahead.
No, I was asking, do you pay attention to previous monthly open?
Yeah, yeah.
Like,
So
because if you notice sometimes even if you got expansion in one direction or the other, it could happen that during the first period of the month, the current month, we are gonna kind of backfill previous monthly open. So in this case, you could see a little bit of a pullback down around 40, 46 maybe 45 and a half, and a reaccumulation there maybe of the daily or lower time frames into a week to then see again expansion
I
higher.
think test of the previous monthly open would be this 43,000 level, right? This level here.
Yeah, let me get closer to the screen. Yeah, yeah, I was talking about that open right there.
Yeah, I mean, you definitely could. I mean, that's a possibility as well. Um,
Because you see that series of green candles, right? Uh, it wouldn't be like unreasonable to get back there in that pocket of liquidity before the last expansion to kind of fill the tank again with fresh liquidity and continuing higher after that.
yeah, it's definitely something I'm keeping an eye on. Um, really, I mean, price would have to travel very far to sort of destroy the structure. I mean, really, um, at least in the near term, it would need to trade below 37,000. So, I mean, that's roughly these lows right here. So, um, that's pretty unlikely, in my opinion. Um, of course, if it closed below these, if it closed below 43,000, that would also be not the best sign. But um, that's 27 days away. So, um,
Yeah, I would say for me, if I look at the daily right now, let's say if I want to be long, the first point where I would kind of put an alert, it would be the daily swing around 40k, 40k 600, something like that. Just put the short term, of course, but that would kind of ring a bell to me.
so you're saying you would be looking for an entry around here?
No, no, I'm just saying. Let's say I'm already long from below, right?
Yeah,
If I see price coming back down, not responding at that pocket of liquidity and breaking that swing, that would be some sort of a alarming sign for me. So I would kind of consider to bail out of the position if I have an entry from much lower, and trying to reassess and maybe getting in back long later on if I see a good response after that. I would manage risk on that swing